it's a good team.
All right, ladies and gentlemen, welcome back. Another episode of Chart Talk. Maybe 54, maybe 55. Who knows? Bennett, how you doing over there? Taking any dogs on motorcycles lately, or anything you want to tell us?
I did. We took Lucky yesterday on the Harley, and it was by far one of the funniest riding experiences of my life, having a little dog in the back. Everyone who saw us was just cracking up.
Is the dog still alive?
He's good. He's still right here on the floor. Got a little peanut helmet. I'll send you the picture after this.
All right, perfect. Let's jump into market outlook, huh?
Let's do it.
Let's do it.
Shake, you want to give us a little market outlook?
Yeah. So we had that first pull-in 2 weeks ago, the kind of the trend breaker in the S&P. So, I mean, we can look at a weekly chart right now. The weekly chart, the trend is still up on the weekly chart. If we go back to the daily chart's a mess. Not really much to make of it yet. You know, this is the big problem area right here. You know, S&P between this 343 area and then this pivot Friday, 331. So once we definitively break one of those areas, I would anticipate continuation in that direction. So we just kind of break 343 highs. We could march back to highs, but we break this pivot lower, and I would anticipate some more volatility. And that's kind of what I think is going to happen. You know, looking at the NASDAQ, this very clear trend that we've been following all year, you know, kind of broke. It's kind of retesting the trend here. You know, is it going to get right back into the trend? Is it going to fail this trend further? I'm not sure. Right now, we're smack dab in the middle of this support and resistance area. That's what made today's gap up so tough. You know, this close resistance right here, this close support right here, we are directly in the middle. So, honestly, I think things could go either way at this point. I'm kind of waiting for further cues from price direction. But what do you got for me, Bennett?
All right, so I got three sectors that we'll go over. First, we're going to pull VGT, which is a technology sector. And hopefully this new mic works because
I can hear you, so that's a plus.
I'm messing with it right now, and I'm like, I just pray that this actually works. All right, so VGT, again, the main theme that you reiterated as well as myself in the big picture this week was a lot of the sectors broke its major uptrend that it's been on for the last few months. So what's going to happen next, whether we consolidate and run back to highs, we start to consolidate and base out, or we have a deeper pull-in, that's for the market to decide. But for now, you can see in VGT the clear upline has broken, and we can see the resistance area. You can see these lower highs starting to form in the tech sector. Next up, one that's setting up is the REIT sector, VNQ. We can see a little entry up through 83. Just a nice little consolidation here. Really hasn't got too banged up recently and hasn't really participated in the rally some of these other sectors like tech and healthcare. And then lastly, one to avoid is going to be energy, VDE. They really have gotten no love this entire year. Really after that last little bounce in June, they've pretty much been dead money. My personal opinion, I really think we have to retest those prior lows before we get any real shake or bounce in the energy sector. So those are the three worth noting for now. And then again, we'll take it as each week progresses. So Shake, if you have nothing else to add, if you want, we'll jump into the member ideas.
Let's jump right in.
All right, so we got Anna. She's looking at DKS through 57.
Looking at some dicks. This guy's looking at dicks. So it's a pretty nice earnings flag. It's taking out highs. I see the tradies going for the earnings flag breakout. Personally, I want this to flag out 2 more weeks before I'd buy this one to the upside. Wait for these moving averages to catch up. Just kind of more digestion. But other than that, I mean, it's looking like it wants to trend higher. But for me, I want some more consolidation. What we got next?
Next, he's actually in this TGT, so he was looking at it through 148.
Target?
He got hit in it today. He took some off into 150, took 25% off, and he has his remaining position. This is where his question was. He has 75% left, but his stop is 143, so pretty much to the low of this, this little earnings gap.
Yeah, I mean, all right, so the stop makes sense. What doesn't make sense is him buying 148 and then him selling 150 when he has $5 of risk. So the risk-reward equation is very thrown off. You can't really sell that 150 if you're buying against 143. You're playing the full macro play. You kind of got to sell higher. But I get it, selling to strength today. I think this looks great going forward, this target. Their earnings were good. The whole back-to-school trades in full effect as more schools reopen up. So I think he's got the right stop. I think he's just got to be more greedy on his profit-taking.
Okay.
Will the stop get taken out? I don't know. I mean,
yeah.
I don't know. If the market sells off, the stop probably gets taken out.
Yeah. He also had another question. He says, we've seen a lot of support buys work in recent times. How can you explain this phenomenon or why this might be? Jake, I'll just take it very briefly. I think for you, Anish, I think you've just been focusing on these support buybacks. So it's not really a phenomenon. It's just that support holds until it doesn't, and it's just you're focusing on it. So I would kind of take he went into a little bit more detail of does he think it's institutions, and it's just you're focusing on support buybacks where a year ago we were focused on breakouts. It's just what we're focusing on right now. I wouldn't get too complicated on that topic. Next, we got Daniel. He's looking at DVA through 89.
DEA?
DVA.
DaVita. Yeah, I mean, healthcare is pretty strong. There's a nice macro pattern here. These guys are grinders, these healthcare names. So, nice macro pattern shaping up. Where's you want to buy it? 89?
Yeah.
Yeah, that makes sense through this last pivot high. I mean, it makes sense. Not my favorite name on the board, but definitely makes sense.
All right, next we got MTOR through 24.
Yeah, you like how, this resistance area became support with this strong move this day. Where's he looking for it? Through 24 quarter?
Yeah, through 24.
Yeah, 24 quarter. Yeah, it's a really nice support buy setup. I like this one.
All right, let's see. Last up, we got UHS through. So he was looking at through 115, but it's already triggered. So
yeah, so I mean, clearly looks pretty good. Nice little base, nice consolidation, overtaking this 200-day simple moving average right here. Looks good. This is more of a macro trade. Mm-hmm. This is like a more long-term trade.
Yeah, we've seen a lot of charts, even like I don't want to say the Boeings, but we've seen a lot of those things where they've had those crazy pull-ins. They consolidated near a relative range, like for UHS is 115, and then they're starting to, kind of break out and push through. So just like but that slower grind, like you mentioned. Next, we got Tyler Kenny looking at DT,
which in this market is trash. Look at DraftKings. Look at fucking DraftKings. All right, these are the stocks you want to trade. All right, whatever. What do you got for me?
DT.
So nice little support buy here. Nice consolidation. What is that? The 100-day simple moving average. Nice little consolidation holding that support area. So yeah, it breaks up high through this 41 area. It looks pretty good.
And then next up, this Joe DeFrank is looking at CRNC through 55.
Looks pretty good. It's very clear that the out is this like 46 pivot or these 45 lows right here. So, you kind of have to give it to these lows. Maybe you could try to sneak in this 50 area, but it's just you're not giving yourself a probability. So if you have confidence, this is gonna fully break out. Software name, I like that. Earnings flag looks pretty good. It's just like just support is a little far away right now.
Mm-hmm. And then next up is ARES, which is an investment management firm. Is looking at through 41, and all-time high is 42.
Yeah, I mean, there's another macro setup. You got to play this one longer term, but it looks pretty good. And these trades are set up for like weekly time frames. This isn't like a day trade or anything like that. These are much longer term trades. So if that's what you're looking for, then this falls into that category for sure.
And then last up for Joe DeFrank is ALGN through 326, kind of 330. Those highs.
Through the inside day today. Okay, yeah, I like this one. Yeah, it gave a nice little inside day. Let's see the hourly. I bet it looks nice on the hourly. You could see like all it did pretty much was coil at the top end of this range for this resistance area. If we could see a volume push through that looks really good. Oh, I didn't see this level. Oh, shit. That looks nice. Nice little longer-term resistance level. Mm-hmm. Yeah, that's nice.
All right, so we're going to switch gears, Shake. I got a quick question I'm going to go through, and I'll take this one. One of the members asked us, he said, lately I've been planning to buy a home. Leading down the road, I'm trying to plan how much of my income should I be saving, and he has 3 accounts. He has a 401k, a taxable account, and a Roth IRA. He's currently saving 22% of his income. He's saving $170 a week into his 401k. He's maxing out his Roth, doing $115 a week, and then he's doing $50 a week towards his taxable. So he's saving almost half his income through these 3 accounts. And when we come across this question, especially as a financial advisor, the first thing we ask is, what's your budget for the home? And then secondly, how much you're looking to put down, whether you're going to get a conventional loan and put 20%, whether you're going to get like an FHA loan and put 4 or 5 or up to 10. But a lot of times we ask these questions, we get the deer in the headlights look, where the person's almost caught off guard, where they're like, they want to buy this home, but they have no idea what they want to spend. So I think that's the first goal is figure out kind of the budget of what you want to, what your budget is for the first home, and then how much you want to put down. Between those 3 accounts, first is your 401k. You're adding about $8,000 a year. What most people are not aware of is that most 401k plans offer a loan provision, meaning you can take up to half of the account value out as a loan for your first home purchase, and it's a non-taxable event. So for simple math, say, this person here had $100,000 in 401k, they could take up to $50,000 out. The money will stay invested in the 401k, and they'll slowly pay that loan back through their paycheck. And again, it's a non-taxable event. So a lot of times when we go through these questions, the person will already have enough for the down payment for the home. They just didn't know they had these little loopholes that they can take advantage of. Secondly, for the Roth, again, you have your first home buyer. For the Roth, you can take up to $10,000 for your first home purchase. And then for your taxable account, it's the same as your savings. You can take out as much as you want or whatever in there. You're only paying on the capital gains. So he has 3 accounts. He can take up to half from the 401k. He can take up to $10,000 from the Roth, and then as much as he wants from his taxable, of course, whatever's in there. So I think the first step for him is to set up how much he wants to put down, and then if he has the money between those 3 accounts, this is probably one of the best times in history to get a mortgage. But we can dive into that deeper. But those are the 3 main points: the half of the loan from the 401k, $10K for the home, and then for your taxable account, you can take as much as in there for that first home purchase. So that covers that question. Next we have another member looking at AOS through 50. So shake your back up. You're back.
This falls under that category of that. I like the tech flag we were talking about before, that earnings flag. It looks good if it breaks through this area. The only problem is, the real out is down here, down at this 47 area. 1, 2, 3, 4 green days. I don't want to buy something on the 5th green day through resistance. So that's my only problem with the setup. I like the level, but I would prefer some consolidation before entering.
Okay. And then next we have this ECL through 210. And if you zoom out a little bit, you can see it's been a little bit of a level since 2019.
Yeah. I don't love this one as much. It's not very very defined level. Where they want it through 210 these highs? Okay, that makes some sense. I get it. Yeah, so through these highs, that makes sense. Kind of the resistance area here. I don't love it though. I mean, again, far down to support.
Yeah. All right, and then we have a question asking if we should focus on industries or sub-industries such as gas utility, water utilities, banks, insurance, etc., versus just major sectors like utilities and finance to have a better idea for relative strength and setups.
I mean, all year we've kind of seen like the high beta stocks go off pretty crazily, and then when they cool off, we see this flight to value stocks, and that's kind of what we're seeing now. But they haven't really returned much this year, so I'm not like super excited about the bank stocks that are flagging now and shit like that. But what I do, it's very simple, very simply processed. To get a gauge of relative strength, I'll just show them right here. I'll go through the S&P 500, and you literally just sort by percentage gainer here, and you can tell all relative strength stocks, KSS, AIV. And these are the strongest stocks. That's how we get a better idea of relative strength. But you see what's bouncing right now. They're all kind of these bottom base setups that are bouncing. So, not very feisty action in the market. We're seeing that rotation. But, I mean, as far as for research purposes, yeah, that's a great way to do it.
And then we got one more question. And this kind of goes into the topic you touched on last week regarding the 3 cells. Mentions my selling style usually involves 2 to 3 different cells in volatile markets like we've seen recently. Do you change that approach? You look to take profits quicker and swing less?
Oh, in a volatile market? So, yeah, definitely. I'll show you guys later today when we go over my trading, even though it was kind of garbage. But what I do is I shrink my time frame because I'm not as confident in swing trades, but I still want to be involved in the market, and I still feel there's a lot of opportunity, especially when volatility hits. You can see the daily ranges on this grind up. They're very small. This low to high, this random day was maybe 0.5% when we're seeing these like 3% moves out of the market now. So I definitely want to be more of a day trader when volatility hits, but I know deep down that I make most of my money swing trading. So, I kind of battle those two demons. But for me, it's shrinking my time frame down for volatility. That's what I do differently. Still, sell it in threes, but just shrink things down.
Okay. We'll jump into some of the social media questions. We definitely have some funny ones. So we're going to start with Dan Smith. He's looking at this RTX through 62.
Yeah, it looks pretty good. I mean, this is Raytheon, right? Yeah. Raytheon's new ticker.
Yeah, they got kicked out of the Dow.
Yeah, you see they didn't even let Tesla in the S&P? That's so funny. But, I mean, this one looks good. This is kind of the setups we're seeing prosper not really prosper right now. That's where we're seeing strength in the market right now, these super beaten up value names. So, I mean, if these want to continue, sure, it looks good through this pivot. This is some heavy resistance here, this 200-day simple moving average at $70. So that's probably like first take profit area. But, if this wants to break out of this pattern, then sure.
Next up, we have Aiden Goodman. He took Nike with us through 100. This was back in beginning of August. And he's still in it. So he's asking, should he sell it up here?
I mean, you want to have your last sell, especially in a name like this that's trending so well and is so much stronger than the broad market. You really want to be stopped out of this name, and keep a pretty wide stop. I wouldn't arbitrarily sell this because this stock has done nothing to tell us it wants to be sold. It's still just grinding higher, one of the strongest names in the market. So don't rush out of your winners too fast.
Now, is this one you would think like leave the pivot for that recent low, like that 110 area, or would you kind of keep it a little bit tighter?
It's tough. I mean, it depends your goals on the trade. If you're a pure swing trader, you should really just give it to this 110. Because it hasn't told us anything that it wants to be sold yet. But I mean, I'll always understand, when things get volatile and things start selling off to take some profit. So, that's kind of like, that's the forever question in trading. Should I sell this? It's always easier to buy than to sell.
Mm-hmm. No, I completely agree. So we have, this one is a funny one. So this guy DM'd us. I'm not going to say his name, so I'm not going to give him a shout out, but he asked us these three stocks. I'm going to preface it, they're garbage names, but go on his profile and he's like trying to teach people how to trade. And I'm like, why are you looking at these garbage names? Like, these are like long-term investment plays. They're not technical trading. You can't make money swing trading. Like, he had this like whole story, but we'll just bring him up real quick.
You can't make money swing trading?
Yeah, he said it's, where's my phone? Hold on, let me give you the quote.
You got to show him my house, fam.
Oh, God. So he goes, intraday trading in this market right now and swing trading is nearly gambling and even worse. And then he goes on to explain these insane ideas why these three garbage companies are going to be worth something in the next 6 to 24 months specifically. And I just told him, like, I'm sorry, I can't listen to stupid. Like, best luck with this. And then let's see. Yeah. So he said that we lost a follower, but he's starting his own trading thing. So
damn,
we're going to play fine. Yeah.
Damn.
It's big we lost. It's big
so
loss.
What are the three names? What are the three names? Let's get this fucking show on the road.
GMHI. He's trying to buy it today for the next 6 to 24 months. That's the trade.
Ugh, that's gross.
I know. Like, what?
Yeah, I don't know. I have no advice. He has it all figured out, so I have no advice for him.
Okay. And then let's see. Next is APT. Same thing. Game plan. Hold it for 6 to 24 months. Not trade it.
I forget what they do. APT. It's something pandemic related. I forget if they were masks or something like that, but sure, whatever. I mean, what are we doing right now?
Yeah. Oh, the last one. SMSI. He was telling me that they're about to sign deals with Verizon, AT&T, and Sprint.
Damn.
Imminent. Like, it's in the works. It's
for this guy's starting his own thing, but he's giving us all these fucking these winners. Pretty sick. This has a nice little wedge, but I mean, it's fucking penny stock.
Just zoom out. If you like go back a little bit, like a monthly, it just.
Oh shit! Oh, it's gross. Ugh.
Yeah. So.
Yeah.
So if you're watching this and we lost you as a follower, just zoom out a little bit and just look at the last 10 years of what this company has done, and then put into the review of what you think's gonna happen in the next 6 to 24 months, and you kind of have your answer there. But anyways, so next we have Real Kusha is looking at ADBE.
Yep.
Yeah, so these are the type of names we've been seeing as the winners in this market, and this is all going to be, these type names, they look just like the NASDAQ. So if the NASDAQ wants to break higher, I'd imagine Adobe breaks higher. If NASDAQ breaks lower, I would imagine it breaks lower. It's kind of as simple as that right now. We're seeing a lot of the names that have been huge runs. They're kind of at this inflection point, and they had really tight inside days today, a lot of them. So it's if you think the market's going to break higher, then they're great buys. If you think it's going to break lower, they'll probably be shorts. So it's kind of just, seeing what the market gives us this week. That's really it. But, like I said, NASDAQ breaks higher. This one probably does too.
Mm-hmm. All right, next up we have a question saying, what's going on with Nikola?
Oh, this is so funny. We talked about how I thought this company was the biggest finesse ever because of the GM. So they gave 11% stake to GM, and that's what caused this move. And they gave him an 11% stake. Nothing. They didn't pay him any cash. They just kind of gave him for their, structure, their internal structures, their supply chain, business know-how, all those things. They didn't get any cash out of it. The next day, Hindenburg Research comes out with this crazy short seller report where it's like things like, all right, so their Nikola 1 video. So they were towing their first Nikola 1 semi truck. The video was it just cruising down the hill, and it looked good. It looked really good. So then they came out, and Hindenburg Research was like, well, we actually found out that they were just towing it to the top of hills and letting it roll down the hills. And they had hundreds of claims like that. So the stock sells off the next 3 days, and over the weekend they come out with their rebuttals to the claims, and they're like, Nikola 2 is on track, Nikola 3 is on track, Q4 2021. We still have all these things. We still have all these purchase agreements in place, Anheuser-Busch, all these things. But we never said that the car was moving on its own in the video. Why would we say, how could, if you're watching a car commercial and the thing is cruising downhill, obviously you think it's propelling itself down the hill. Yeah. So obviously this company's super shady. And so they bounced today because, CEO is buying stock and all these things. But then SEC, you can see it's down 8% after hours. SEC just announced a formal investigation. So this is just getting underway. It's going to be pretty crazy to watch.
God, that's hilarious. I saw the first video I saw. Well, it rolled on the hill, but I never see the rebuttal yet.
So yeah, they came out we never claimed that it was propelling itself down the hill, and it's like it was the whole commercial.
So, anyways, all right. So we got one last funny little social media thing. So if you want to pull up the screenshot of one of Tyler Kenny's buddies who was stating facts that the market is going to go back to highs. You want to pull up that little quote?
All right. So just very briefly, this guy is claiming, for facts, not a hunch, it's guaranteed that the market will go back to highs, not in 2 weeks, in a week.
Wait. Can I read this aloud? This is fucking hilarious.
Yeah,
Yo, bro,
please,
I know you don't really trade options, but I'm dead ass. SPY is going to make a new all-time high before next week is over. Regardless, we'll be back to all-time highs before this week is even over. Wow, I hope so, yo. SPY 350 calls, September 23rd, 82 a pop. You can buy a few of them, sit on them. They'll be $1,000 a pop by this time this rally is over. There were 35 last week. Stupid easy way to turn a couple hundred to a couple thousand. Not a hunch. He has a fucking crystal ball. He's talking for a fact. We're going to all-time highs, 359.77. Book it here. You heard it here first. I hope he is a service. I'm trying to subscribe.
But it's just even just with options, it's okay. He's talking about a 5% move in the SPY, but he's expecting an 1,100% return out of the call. And one of the first even
because it's a weekly option. I get it. I mean, if we go to all-time highs, it's because it's so improbable. That's why the expected return be so high, because his trade probability is so low.
This is like a crazy part. But yeah, the one thing, especially with options, is you go towards it for leverage or lack of funds. So again, this guy's talking about how it's a guaranteed fact, but he's hinting at how a couple $100 and a couple thousand. The guy doesn't have that much money. But when you trade options, you need volatility. You need these things to move. And when you go to the SPY, you're buying one of the, safest, funds that are out there. If you're buying options in like Nikola or Tesla, you're going to get much crazier moves where you can probably get 1,100% in a Tesla call. Where getting it in the SPY, you're just trading something that isn't moving as volatile compared to individual stocks. So just if you are trading options and you're trading the SPY, you're very hard to get those 5-to-1 returns. And again, one of the reasons why we don't trade them at all is, we have the funds to trade our own stock. But anyways, Jake, if you have anything else to add, go for it. But.
Yeah, I mean, you're going to be paying up for you're talking about Nikola and Tesla options. You're going to be paying up at premium for those to trade those names. So, I mean, regardless, trading options, your just probability is much lower than just regularly swing trading stocks. But I mean, homeboy before said swing trading stocks is unprofitable. So the fuck do I know? Let's keep it moving. What are we doing?
All right, we got good trade, bad trade.
All right.
So first up,
You want to start?
Yeah, I'll do the first one. We got it's DNLA. Forgot who sent this in. I didn't put the name down. But anyways, DNLA, I believe, Shake, this was one of your call-outs. I think it was in the shakedown, if I'm not mistaken.
Yeah, it was.
Yeah, so he bought up through 31. He had a stop versus 29.89, risking $1. His target was 37. He so far kicked a third for 2-1. Again, normally he would kick for 3-1, but again, his more volatile environment, he's been a little bit quicker on his kicks. He's still holding 2/3 with his aim to sell at least at 37 or higher. So he's holding the rest versus that stop. Again, the only thing I would really do differently is I would try up that stop versus that, this 32 area. What is that, 31.50? Low day today was 31.75. So I would maybe up that stop just a little bit versus break even, or didn't want to lose money in it. But I think it's, Shake is a great call. He's making money in it, so win-win. Next we got Natalia in Apple. If you want to pull that chart up. Let me take that one really quick.
Yeah, you got it.
All right. Okay, so for her, this is her worst trade of the week. She said she got caught in FOMO. She, kind of chased it the first day and got stopped that same day. So again, little paper cut. I think the bigger thing is if Shaky pulled the next chart of Apple. Let me know when you have it up.
Yeah, it's up.
So, I try to draw this out. These very, huge, kind of easy uptrends in Apple, and we've seen this with a lot of stocks recently, where, and even in names like Tesla and Amazon, you get these crazy or easy runs up, for months on end, where everyone thinks that 90 is a top, 100 is a top, 120, keeps going up and up, and that's like the easy time when it's, most people don't want to get into it, and then once it really starts to get banged up, is usually when a lot of the newer traders are trying to rush back in to get in because it's going to now go higher this time. And it's just something where it's like for this trade, she knows she could have avoided it. It was clearly an emotional trade. But those are things when, once that big trend gets broken, you got to give these, especially these runs they've been on, you got to give them a couple months, at least a month or two to kind of set back up versus trying to rush back in and buy that first new, pivot low. So again, she didn't lose much, probably lost 1% or 2% in the trade. So definitely a little lesson learned. Okay, next we have. Jake, you want to pull up that TGT trade?
Yes, sir.
All right. Okay, so she saw the gap.
This is a sick trade.
Yeah. Again, saw the gap from the day of, got in, bought on the way up, 123 versus 122. Phenomenal.
kicked a
So
third.
this is when you should highlight the difference between our trading and options trading. Whoever they entered 123 versus 122, $1 risk, sold first 129, and then got stopped out 143, 144 on $1 risk, made like $20, 21 risk reward. That's huge. That's huge. And what you needed to make that was time. You needed the time to let the setup play itself out, and that's what happened here. So this is a great trade. This is textbook swing trading.
Jake, you nailed it. Next one is TTWO. This is, again, as a fail trade, but again, very good example on why we focus on trading stock. So in this trade, stock was wedging, didn't break out. So fortunately, she got into this a little bit too early. We would have waited for that confirmation, but she tried to get some good stock on low risk. The trade failed. She got stopped out. This is a perfect example where she bought 171. She got stopped out 169. Again, should have waited. Lost trade in a few minutes. She lost 1% in this name. You had $1,000 in this trade. She lost $10. If you put $1,000 in a long call of this same trade, you lost that $1,000 basically in 3 days. Day one you probably lost 20 to 30%. Day two you're down 50. By the end of the week you're down 90 to 100%. So that same person with $1,000 in the option is down $500, $700, $1,000. Where Natalia has $1,000, she lost $10 or $20. So that's the difference where she could be wrong 10 times, 20 times over relative to that option trader. And trades work great. You make money. Trades fail. It happens all the time. And these are two very good examples of why we focus on buying the stock and owning it versus trying to rent it for a week or two and being perfect. So that wraps up the member ideas, Shake. If you have any trades you want to go over, and I'll go over the few that I had, if you like, after.
So So like I mentioned, I shrink my time frame down heavily. So the winners from last week for me, I bought this Beyond here, and I sold most into this 2-day move, and then got stopped out break even here for this. I think this looks amazing though going forward. This is one of my favorite charts out right now. Still think it goes higher. What was the other winner last week? Oh fuck, this is DraftKings. So I'm still holding this one on a long-term account. I got all out in my active account, unfortunately, but I mean, just great job by everyone in the chat. We fucking nailed this. Nailed this DraftKings here. Bought through this inside day high. I sold most into this pop and just took everything on Friday. I wasn't really trying to hold risk until the weekend. Still got a long-term account. I traded like shit today though, and I will get into it. So we had the gap up in the SPY today. Let me get what I was thinking here. So we saw some weakness into the close Friday, and then what we've been seeing in the last few weeks, you see we close here, we gap up to here. And what we've seen in the last few weeks is these Monday gap ups were getting sold off. So I was coming in with this gap up, thinking kind of short on the brain after the pop came in. So I was looking at this Etsy. I love this name for long term as a long, but I just was thinking a momentum short here. We see it kind of breaking the trend here and has all these red hammers looking like it just wants to break these lows. So when the market opened this morning, I saw it continue to have this weakness, and if you look at what the SPY did off the open, it continued to rage right off the open. So it's Etsy coming down. I was looking for that momentum short. So when it was breaking these lows, I was adding into the position pretty heavily. And then the thing I did well here, which I did the next trade too, I saw the buying on the tape, and I saw buyers come in. I saw this high volume at support, and I took off 90% of my position. I left 100 shares to get stopped out to tell me I was wrong, but I saved myself a lot of money here so the reason I could do that in this trade versus it being bad in another trade, and I'll get into it in a second. I did it again here in this Chegg. Same thing. These momentum names, I thought they were coming in today. They didn't come in. I was wrong. Sometimes you're wrong. I was shorting the bottom of this flag, and then when these areas should be loaded with stops, and you should see the stock start puking. I was in this trade for 10 minutes. I shorted some here below 65, shorted some more when it, breaks this low. And then with the buying volume just comes right back. That's when I kind of gave up on it. Now here's where, because these are momentum trades, it's similar to a breakout, but opposite. Here's where it hurt me. So we were looking at this NASDAQ today, this 30-minute. We were looking at this level right here. We were like, all right, NASDAQ is clearly in this range here. And it was lunchtime, and this was actually a pretty good trade, and I put on a short against highs. But then I was talking to myself, I'm like, if I'm just looking to trade the indices right now, am I forcing trades? Is anything really going on? Yes, I shorted off resistance, but, I immediately just gave up on it. And because maybe I took those other trades off very quickly, and it ended up being a good thing, maybe that messed up my psychology in this trade, because this wasn't a momentum trade. This was similar to a support buy. This is like a resistance short. This is coming at resistance on a gap up, and it's failing, and I got short. But then you see I gave up on it right away. It was lunchtime. I was like, maybe I'm just forcing this thing. So that was my main mistake today, and it was probably caused by my other two trades. So that's really all I had going on today. Not much to show for it. Just kind of trading back and forth, giving the market makers some money. But that's really all I did today. What you got for me?
All right, so first up I have this GWPH.
Got it.
All right, so this is a name, like I've been watching this name for a little bit, and we saw, I treasured it out, like the little shakeout day. It's been setting up around this like 104, 105 area, and I saw a couple of days back kind of pushed out and came right back and saw a little bit, some higher lows. And I saw this level has been setting up for some time, so I took a little feeler, picked some up through that 104 area. For now, I'm going to give it versus 100. Again, the proper route will be versus that 95, but I'm not giving this thing 10 points, for it to go, to 120 or 140. So that was just a feeler I got into today. Next was this LMT. This was a name that we got into on Friday. You can see this full $100 area of resistance. Soft level. It's broken a couple times, but we can see it has respected it in the past. I don't want to be perfect trying to buy 400 and expecting it to just float to 440. And I could see it holding 380 for now. So I bought up through 390. For now, the stop is verse 380. But as it kind of gets up near that 400 area, if it does push through, I'll look to up that to break even, and then try to hold for at least that retest of that prior high of 440. And then let's see what else. We have Travelers TRV. This thing's been, just kind of flagging for a bit. Still in this overall downtrend, but I saw it hold this. 111 has been some area support recently that's been holding. Again, I'm not trying to be perfect and buy 111 versus 110.89, but I'll look to buy up versus the intraday high. I got in today. The next entry I'll look to buy up through 116 and then eventually through 120, trying to build into this position for a move back to 140. But for now, the stop is versus 111. The trade that I'm still in is this Triple M. This is a trade we went over again, beginning of August. Kicked some into strength. It's been flagging out. The original stop was break even for the remainder stock versus that 132, and then we moved out versus 160 when we saw it starting to flag and hold, and it's still doing that. It's still setting up for a move through 170 and through 172, but for now I'm going to just stick with the cost base that I have and just keep trailing with that 160 stop. And that's all I got for good trade, bad trade. All right, so we want to jump into the top idea.
Yeah, I got yours up. Let's talk about IQV.
All right, so we got IQV. Again, if you zoom out, this thing's been flagging under this 165 area since mid 2019. Again, it's a soft level, meaning it broke 165 before, but it's still acted somewhat as resistance. We can see 155 has been support recently. If it does go, say this week or next week, I'd be trying to keep it a little bit tighter versus 160 for now. But there's a name on the radar. And then one other one is this QSR. QSR has always been pretty good at the alpha chat. We've had a couple of decent trades in it over the years. And it's been flagging under this 57 half area versus 52. And again, I'm not trying to give this name, 5 points when it does go, but for now, that's kind of the flag it's been in. And when it does trigger, we'll have to, go prior lower day or lower day and kind of trail it from there. So those are the two that I'm keeping an eye on. What about you, Shake?
All right. So as I mentioned, this Beyond Meat, I think this one goes higher. The entry is going to be tricky because it's up a bit from Friday's low, and then true support's down at this 120. But this looks like it's ready to kind of propel from here. This SFIX is starting to look really nice. Really big base, a lot of strength. They have earnings coming up September 23rd. Didn't know that, so that might be a wash. What else? This CMI, really nice flag here at highs. Pretty decent consolidation. Watching that one to push through highs. This O'Reilly Automotive, another slow mover setting up through highs here. 485 there for the entry. What else? And then a bunch of these names, like I mentioned. So a bunch of these names, it's decision time. It's like Docu. Is it gonna break the support and fall off the map, or is this a buying opportunity? This support buy. It gave us that inside day support buy setup. Similar to Roku right now. Retesting this breakout area, holding this 100-day, 50-day moving average, and gave us a little inside day. So this one could break higher tomorrow. And then this Etsy, I really like long term. I'm not sure if it's ready yet. Decent inside day here at support, but just kind of watching this one still for now. I got a couple more out, but save them. Yeah, that's what I'm looking at.
All right, I think we can jump into book of the week.
All right, let's jump right in. All right, book of the week. Bennett, I'll get us started off. My book this week, it was recommended by one of my lawyer friends. It's called How to Present, Persuade, and Prevail Every Place, Every Time. Win Your Case. So this guy is this high-powered trial attorney, and they always have these corporate conglomerates like come against him and stuff, undefeated. So this guy really knows what he's talking about. And the book gives like a step-by-step process about turning evidence into a narrative and just making a really compelling case and things of that nature. Just evaluating other people's emotions, using them to your example. So, a lot of courtroom tactics that you can use in life really well here. So, Jerry Spence, Win Your Case. What you got for me?
I got Your Next 5 Moves by Patrick Bet David. One of the key lines I took out of the book so far that relates to most trading is poor processors play the victim and blame others or outside events rather than seeing how they contributed to their own problems. And we see this all the time with new traders where it's every time they're wrong about a trade, it's the market's rigged or the algos are beating them or the broker's the problem. But then when they are right in that one trade, it's they're the smartest person, they're the genius, they had this master idea. And it's a very relevant topic that I think in all fields, the newcomers kind of have that. fallacy. So it's been a pretty good book so far. Definitely worth. Very easy read. Not a dense one like the last few books. So I think we wrapped it up.
All right, cool. Let's wrap this thing up. See you guys next week.